discover how to get investment from family offices and venture capitalists in today's episode with Oliver Peters. So, Oliver, please tell us, how can entrepreneurs get investment and become investable?
Welcome to Awakened Titans podcast with Lily Patrascu. Mind-blowing conversations with influential business titans sharing how you can manifest abundance, love, joy, success through quantum awakening, quantum manifestation, quantum healing, quantum miracles, exponential business growth, and innovative products and services.
Hi, Lily. Thanks for having me on. I wish it was that simple. I wish I could give you a step-by-step and just be on your way and go and get capital. But unfortunately, it's not quite that easy. But there's a couple of key points that I think are gonna really help some of your listeners. The first is traction, right? I think traction is the new idea. If you can prove traction to a venture capitalist or a family office, you're far more likely to actually go and get that capital. And the second is your network, right? The absolute reality of obtaining capital is you're far more likely to obtain it if you're utilizing a warm, introduced network and personality type. So I would urge people to be building those relationships as early as humanly possible and sharing the traction with those types of organizations to improve the likelihood of getting capital.
Thank you. Now, imagine entrepreneurs that are continuously surrounded by family offices, really wealthy entrepreneurs, and people that generally have the capital. There's a different issue there, which is like, how do you actually convince these family offices and wealthy entrepreneurs to give you that opportunity, first of all, to be in front of them? Because a lot of these companies and entrepreneurs that have the money tend to be very savvy investors and tend to be overloaded with too many applications from similar companies or offers and so many investment opportunities. So how, first of all, do you get the opportunity to be heard? Because I've heard that a lot of entrepreneurs who invest can spend as little as a few seconds on your pitch deck. How do you get a lot more than those few seconds? And what do you have to have on your pitch deck, or that will kind of like give you that opportunity for entrepreneurs to actually invest?
Yeah. The reality of the situation is you have to be solving a problem. Okay. And a lot of entrepreneurs and individuals overlook that critical factor. Okay. Whether it's too much focus on the product or too much focus on the business and not enough focus on the actual problem that you're solving. That's the absolute crux, and that the difficulty is then articulating that and telling the story linked to what problem you're going to solve. But if you're trying to generate interest from an organization that is about to give you, upwards of $5 million, okay, they have to be sure that you're solving a problem, because that's how a business scales. That is how businesses go on to make millions. And something that's often overlooked as well is if you're in a situation where you're taking capital, whether it's from venture capital or a family office or private equity, they're in it to make money, right? And the vision and the value of your business and is absolutely important. But they have to see that they're going to get a return on their money. Otherwise it's not investable to them. And going back to a really important point that you mentioned there, how do you actually get heard? It's incredibly difficult, is the reality of the situation. And that's why, as I talked about earlier, you have to utilize your network, right? And build relationships early, because that is the only way that you're going to get in a room with the individuals that are actually going to be able to write you a check, if that's a big part of the business plan. right? And it doesn't happen overnight. That happens over multiple months and years, and you have to give and give and give without asking to receive. And if you can get comfortable doing that, your likelihood of getting capital is far.
Thank you. What are the metrics that entrepreneurs should be measuring and have in place before they look for investment from family offices or venture capitalists?
It's very industry dependent, right? Which is my first comment. So if a tech business, for example, is slightly different to a biotechnology or a science-based organization, and you have to look to the metrics that are viable within your organization. But if we're going to be specific to tech, for example, what's your subscription base and what's your recurring revenue? And how is that linked to growth, and what is the potential growth of that product into that market, right? And those types of metrics are absolutely vital to justifying your feasibility for capital.
Thank you. What requirements are there for team members before a family office or venture capitalist could consider giving you capital for investment?
Great question. I'm actually not 100% sure what the regulations or perimeters might actually be. I don't actually think there are any, but there might be. Good question. What I can tell you is some statistics around the likelihood of getting capital linked to your co-founder and equity stakeholders. And this is changing quite quickly with AI and automation, and we're seeing a far greater number of solo founders and bootstrap founders. But at the moment, the data suggests you are far more likely to get capital if you actually have a co-founder team. I think the ideal number is a team of 4 on the shareholding equity table, and there's a couple of reasons for that, right? Family offices or capital providers, they know that a team of individuals are going to move faster than an individual, right? Because they can cover more in a shorter amount of time. So that's absolutely a factor, and that's something that my business, Loud Solutions, supports early stage founders with as well, going to the extreme of actually supporting and providing co-founder search solutions for early stage founders. And another trick in the playbook is, if capital is that important to you and your business, then I would highly suggest finding a co-founder that has some type of experience in raising capital already, right? Whether that's a chief commercial officer, a chief investment officer, bringing someone in early who can buy into the vision and the mission of the business, that can actually single-handedly manage and improve the likelihood of you getting capital is a really interesting and feasible play for early stage.
Thank you. If you don't know this, you may not get capital at all. For example, if you don't have a CTO for a tech business, you're not likely to get capital. Am I right in saying that? And also, are there particular people that key people that if you don't have them in your team, you are pretty much guaranteed that you're not going to get capital? For example, if you don't have a marketing department, you don't have a sales department, you have only a team of developers, and you have a great idea and you're developing a great product, but you actually don't have any traction because you actually don't have a marketing and sales department. Am I right in saying that? And if yes, tell us what kind of key people would make it almost impossible to get investment if you don't have those particular key people.
Yeah. The reality, Lily, is even if you have all those people, it's still incredibly difficult to get capital. Unfortunately for a lot of your listeners, the numbers are not in your favor. The numbers are the likelihood is you're not going to get capital. But there's some critical people and departments that you can have that's going to increase the likelihood of getting capital. So first and foremost, and what is a bare minimum, is that the strategic or commercial leader and the technical leader. Okay, and they're the two top pillars that are pretty mandatory unless you're a bootstrapped solo founder. Okay, and what that actually means is you would have perhaps a traditional CEO, right? An individual managing the long-term vision and viability of the organization, managing the strategical and long-term strategy, managing the executive element of the business. Okay, and you would then have a technical or scientific leader, depending on which industry again you're focused on, and that individual would be leading the product, technical, research and development, whatever industry you're in, the technical element of that business. Okay, other really critical people that we have found increase the likelihood of getting capital are successful, experienced board members. Okay, so building out your board team early is a surefire way of increasing the likelihood of getting capital. That's an interesting tactic as well, because you can pay those individuals in equity. You can utilize people that have gone through the process before, right? So again, you're tapping into their network, right? Thus increasing the likelihood of getting a capital from them and their network as well. Bless you. Outside of that, I would say they're the kind of 1, 2, and 3 most biggest priorities from a people department. Outside of that, there might be a CFO need, right, and a financial need, because capital partners like to be able to see someone who can manage and oversee the numbers. But sales, marketing, finance, legal, in my opinion, very important, but right at the early stage, perhaps less important than board members, executive or strategic leader, and then that technical leader as well.
Thank you. What's a good strategy for entrepreneurs to use in order to get favorable terms of investment from family offices or venture capitalists?
Really good question. Research and data. Okay, any negotiation that you go into, regardless of what you're negotiating, one of the best tactics you can utilize is referring back to numbers and data. And I would urge everyone to go into those negotiations with exactly that. Scour the internet for deals similar to yours, right? And what percentages and negotiations had happened with other similar businesses to yours, and also go into it understanding what you really need to get out of this as well. Think of the outcome that you need and want, and work backwards from there. And don't take money if you know it's a bad deal, and you know you've got to the point where you're lucky enough to maybe get a terms sheet. If it's not mutually beneficial, you should not take that money, because the reality is it's you doing all of the work. You need to be completely comfortable with the work that you need to go do and take off over the next couple of years. So if you're not comfortable with it, do not take it.
Thank you. Where can entrepreneurs find better ways to get investment that are not necessarily from family offices or from venture capitalists?
Yep. So there's a range of different localized and state-run grant programs which they can look into. I would urge organizations and founders to look into, accelerator groups in their local practices, which a lot of them would be run by venture capital funds, but specific accelerators and programs that they could go into that would accelerate and speed up the process of them getting capital. There's all sorts of different programs and services out there nowadays, like improving your pitch deck, right? Improving your pitchability, so improving your actual pitch. Again, if you're lucky enough to be able to do that on a video or in person, it all comes back to iterating and improving. Fail fast and learn, And the other reality is you can keep trying, and you might get 1,000 no's, right? But what are you getting out of those no's, and how are you improving what it is you're offering and what you're doing, and keep moving forward. You know, if you're an entrepreneur, that's part of the pain is moving forward.
Thank you. What's the difference between working with an incubator or getting funding from family offices? What's the typical percentage that an incubator would get? Is there like an upfront fee and commission, or how does it work?
I think most incubators would operate pretty differently. I don't think there's a blanket percentage or fee, but in general, an incubator is going to be a much earlier stage program that is going to take you from, maybe even idea to, now you're ready to go and speak to family offices or venture capital funds to go and get maybe a seed or a Series A. An incubator or an accelerator is the idea stage. And they would take you through programs of improving, your ability as a founder, your speaking ability, your pitching ability, and that would either be a cost, or that would be a cost and equity, or maybe it would just be equity. That would be dependent on each individual incubator.
Thank you. What are the top key steps for entrepreneurs to become investable?
So you're touching into something that's quite important there, and what that is removing you as the founder from the business or your product, right? And a lot of founders would think that it's not them getting invested, it's the business or the idea that they have. And actually, I would flip that. I would say that most venture capitalists are probably investing into the individual more than they are the idea or the business, right? So that directly impacts you as an individual being investable. Okay, track record being one. You have to be able to prove that you've been there and done it. And if you haven't, how can you link what you have done to success? Comfortability and confidence, right? Can you speak on stage? Can you negotiate? Can you communicate? Can you communicate clearly? Obviously, I can't. And bring some human elements to it as well. People want to work with people they like. People want to work with people who are honest. People want to work with people who are extremely passionate about the area of business that they're in. So continue to hone your personality and hone your experiences into that, and be honest and be true to yourself. There's no point building a tech business if you don't love tech, right? And that's going to come through. People are going to figure that out as time goes on. So build a business that is yours and that's you, and be honest and put your own stamp on it. And people will see that, and people will buy into that much more easily.
Thank you. For those entrepreneurs that have no traction, what chance do they have of being investable? And is that a good option to seek investment without traction? Or is it a better option to look for clients first and then seek investment?
Well, if you're a founder and you have no traction and no past experience of success, the reality of getting capital in this particular market is very, very unlikely. Bringing all the way back to my original comment, right? It's the reality is you have to be able to show and prove traction, and the more that you do through revenue or subscriptions or your business success, the more likely you are of actually getting capital. And look, there's hundreds of people that will speak about this, and people that start a business and think that they need capital, and then they don't, and they get frustrated, and they go on and they continue on, and they start to get some success, and they think, oh wow, that's amazing, I don't need capital, this is great. And right as they're getting traction, lo and behold, they get a whole load of offers to take capital and to grow faster, because that traction is what the capitalists are looking for. So to answer your question, it's very difficult to get capital if you don't have existing traction or a past track record. So yes, absolutely. You need to go and build a business that isn't totally dependent on getting a $5-10 million check.
Thank you. For those entrepreneurs that need a $2 million investment, they may need to prove that they may need to prove how they're going to use the money with I'm not sure if it's called a feasibility study or something of the sort, where you can demonstrate, okay, this much of the money will be used for marketing, for sales, for admin, for HR, for that kind of thing. So when you haven't got the traction to kind of figure out what's going to happen, and you haven't built a business that was a multi-million pound business before, it can be quite costly to kind of figure out all those different feasibility studies. And let's say you don't have that money, what would you do?
I mean, if you didn't have all of those experiences and you didn't think you were going to get the capital, you don't necessarily need to do that task, right? But I also like, if you're a founder and you don't have some type of way of tracking or predicting the profitability of your business over the next 2 years, then I would ask, what the hell are you doing? Right? You need to know what your outgoings are, and you need to know what your incomings are going to be, and right, it's pretty black or white. You're absolutely right. I think if and when you're going to get a $2 million check from whoever it might be, you need to justify where that money is going to be spent. But I think more importantly, you have to justify what the return is going to be for the organization giving you the $2 million. Right? It's not just let me borrow 2 million from you, Lily, and I'll spend that a little bit over here and a little bit over here on some hiring, and then away we go. They're going to want to know how their 2 million investment today turns them into 20 million in 5 years' time. And with that, you need a pretty sharp estimate of what your P&L is going to be, how you're actually going to scale, and how you're going to become profitable.
Thank you. For companies that you've worked with, or companies that you've seen be successful with raising investment from family offices and venture capitalists, what did you notice they do differently from all other companies?
So there's no one size fits all, but there's an organization we're working with closely at the moment, and we've worked with them, all the way from pre-seed, and now they're right on their journey to land a large Series A. What they have done better than most is work outside of their own echo chamber, right, and constantly acquire and request feedback into the organization and the product that they have, and then use that feedback to improve the product and the business that they have. Right? They weren't, and this particular founder, who's a wonderful man, had an idea day one and could have been very precious about that particular idea, but instead recognized that it wasn't about that idea, right? And fast forward 2 years, it's still linked a little bit to what the values and the mission was of the business originally, but the actual product itself is completely different, right? They've pivoted and they changed, and they took feedback and they took data and they researched things and they improved it, and that has set them apart from competitors and other businesses similar to them that have been fighting in the same pools, if you will, for capital, and they're coming out on top because they're using that research, they're using that feedback, and they're improving it and implementing it into the business really, really fast and really, really successfully.
Thank you. Tell us how you can help businesses grow.
Cool. Yeah, Loud Solutions is the name of my business. In short, we help early stage organizations scale smarter and grow faster. So we have a variety of different programs in place, from capital to human capital, and we provide everything from advisory teams to processes, platforms, and programs that take founders and entrepreneurs from 0 to 1, and from 1 to 2. But that's our business. We work across a multitude of industries across the STEM marketplace, so technology and science, and we're hyper focused on the early stage, and that's what sets us apart.
Thank you. Tell us where entrepreneurs can find you.
Loudsolutions.com is our website, and you can find me, Oliver Peters, predominantly on LinkedIn, which is where I spend most of my time, unfortunately. But Oliver Peters at Loud Solutions on LinkedIn.
Follow us for more interviews with world's most influential business titans, providing you with the insights to awaken to your full potential, so you can get paid to be yourself, find true happiness, and manifest anything you desire.